Look, it's arguably, there's been two very difficult periods, I think, for fund managers in general. Starting off, I guess, for a period of 6 months, ending 6 months ago, everything was flying, and if you showed any discipline, you got left behind. And it was particularly tough then, sticking to discipline, and watching market march ever higher on multiples that weren't credible, and it was just the weight of money pouring into the equity market in search of yield. We stuck to our discipline. Although the fund did reasonably well, very big numbers, got a few complaints from our clients. We were obviously taking too much risk because the numbers were good, but we didn't keep up with the market. We had about 30% in cash at one stage, and then at the end of March we just thought things had just gotten too expensive generally, and we don't normally make macro calls, but we found that the weight of money had pushed so much money into the market that buying insurance was actually a very good deal. So vols were very low. We'd buy 6-month puts on the XJO, 5% out the money. And so we scraped off a small percentage of the 8 or 9% we'd made in 3 months, and bought some insurance. We hoped and prayed that it would expire worthless, because when you insure your house, you don't really want to claim on a fire. Some people do, but that's not what we do. And then it almost flipped around when greed turned to fear quite quickly, and we found that those puts became really worthwhile insurance as the market fell, and that weight of money virtually evaporated, and the twin concerns about sustainable growth in China and the Fed lifting interest rates began to really weigh on investors' psyche. And in August, I think it culminated in maximum fear. It may not be maximum, because we may experience that again, but what we thought was maximum fear. And that resulted in an important change of mind for us, because we had to do a few things. First of all, it's quite easy to stay in cash and say, we're disciplined, we don't buy things that are expensive, even when things are sanguine and the outlook's not bad. The real challenge is that when things flip around and the outlook's awful, yet that awfulness is more than reflected in the share prices, having the courage to reach out and actually buy things and deploy that cash in size is quite hard, as we found. Nevertheless, I think we did a reasonable job on it. We deployed literally tens and tens of millions of dollars of cash into what we think are very attractive positions. And there were 3 probably positions in hindsight that I look back on, where you had what we call the alignment of the planets, where you have very good businesses run by competent management at what is very attractive prices, because of fear and more importantly, a liquidity event that is usually well telegraphed, that weighs on the share price and creates an additional buyer's strike in that particular stock. And the 3 examples, I guess, would be, in no particular order, but I guess would be Origin's selling of its stake in Contact Energy at what was a particularly low point in electricity generation in New Zealand, because of the uncertainty about whether Rio's aluminium smelter would continue there or not. And they're the largest electricity taker in that market. Origin itself was feeling the pain and needed to raise some capital, and I think they sold one of their best assets at a very attractive, close to double-digit yield. We managed to pick that up in size. Secondly, Spotless, the private equity guys, everybody knew they were coming out of escrow at the results. The share price fell because everyone knew that that stake was potentially coming out, and the weakness in the market. And we were able to pick up a really nice chunk of that at close to the bottom. And then thirdly, Duet did a transaction where it bought Energy Developments, quite a big bite for it, and issued primary shares at a 9.5% yield for utility stocks. Not a bad play. We fortuitously had virtually sold our entire holding, and then got an opportunity to reload at a wonderful price. It wasn't an easy decision, don't get me wrong, these things aren't easy, but we did our work, and eventually we stumped up the money.